Is the U.S. housing market about to crash, or are we just seeing a temporary correction? Home prices are shifting, mortgage rates are unpredictable, and buyers and sellers are stuck in limbo. If you're wondering whether now is the time to buy, sell, or wait, you're not alone. Could we be heading toward another 2008 style collapse? Or is this just a healthy market reset? Today we're breaking down the data, expert predictions, and what you need to know before making your next move. Let's start with where the market stands today. Because before we can predict where it's going, we need to understand where it is right now. For the past several years, we've seen home prices skyrocket across the US. In 2020 and 2021, lower mortgage rates fueled a buying frenzy, pushing home values to record highs. But fast forward to today, and things are looking a little different. Mortgage rates have jumped from 3% to over 7% in some cases, drastically reducing affordability. Home sales have slowed, with many buyers stepping back due to high monthly payments. Sellers are stuck. Some don't want to sell because they don't want to lose their ultra-low mortgage rates. But at the same time, inventory is creeping up, which could mean prices may soften in certain areas. Now, what does this mean? Are we heading into a free fall, or is the market simply normalizing after years of unsustainable growth? To answer that, we need to look at what's actually keeping this market from collapsing. Despite all the headlines about a housing crash, there are several key factors preventing a full-blown collapse like we saw in 2008. First, stricter lending standards. Remember back in 2008 when anyone with a pulse could get a mortgage? That's not the case anymore. After the last crash, banks tightened lending requirements, meaning most homeowners today actually qualify for their loans and aren't sitting on risky, adjustable rate mortgages. Second, the supply and demand imbalance. Even though inventory is rising slightly, there still aren't enough homes to meet demand. Builders have been underbuilding for over a decade, and with millennials, the largest generation, entering their peak home buying years, demand isn't disappearing overnight. Third, record levels of home equity. Homeowners today are sitting on more equity than ever before. Even if home prices dip, most people won't be forced into foreclosure like they were in 2008. So does this mean prices will never drop? Not necessarily.
Not really, no.
In fact, there are several signs that a correction may already be happening. Even though we're not seeing a 2008 level crash, we're definitely seeing signs of a market correction, and in some places, it's already happening. Home prices aren't crashing nationally, but some regions are seeing noticeable drops. Cities that experience the biggest booms like Austin, Boise, and Phoenix are seeing prices fall by 5 to 10% as demand cools off. In 2021, sellers could list a home and expect multiple offers within days, sometimes within hours. How about now? Many are cutting prices just to attract buyers. In fact, nearly 1 in 4 homes on the market has had a price reduction in recent months. High mortgage rates have made monthly payments hundreds, sometimes thousands of dollars more expensive than just a year ago. This is forcing many buyers to either pause their search or move to more affordable areas. Let's take Sarah and James, a young couple in Florida. They saved up a year to buy their first home. In 2021, they were outbid on 5 different homes and felt pressured to stretch their budget just to compete. Today, those same homes are sitting on the market longer and sellers are more willing to negotiate. While interest rates are higher, the market has shifted in favor of buyers who can afford to wait. So how does this compare to the last housing market? A lot of people hear housing crashed and immediately think of 2008. But let's break down why today's market is very different from back then. Foreclosure risk is low. In 2008, the market collapsed because millions of people had risky, adjustable rate mortgages that they couldn't afford once payments spiked. Today, 90% of homeowners have fixed rate loans, and over 60% of them have mortgage rates under 4%. People have equity. Homeowners aren't underwater like they were in 2008. The average homeowner today has $200,000 plus in equity, meaning even if the price dips, they won't be forced to sell at a loss. No massive job losses. The 2008 crash was fueled by widespread employment. While layoffs are happening in some industries, the job market overall is still strong, keeping demand relatively stable. So if this isn't another 2008, what does it mean for you? If you're a buyer, prices in some areas are softening, but mortgage rates are high. If you find a good deal and can afford the monthly payment, it might be worth buying. Just be prepared to refinance later if the rate drops. If you're a seller, be realistic about pricing. Homes are sitting on the market longer, and buyers aren't paying over asking like they were before. If you need to sell, pricing competitively is key. And if you're an investor, some areas are still overpriced, while others are starting to offer better deals. Cash flow should be your number one focus. Don't count on appreciation alone. So is the market crashing? Not exactly. We're seeing a correction in some areas, but this isn't a repeat of 2008. That said, every market is different, and this is where things get important. Remember, real estate isn't just one big national market. It's a collection of local and micro markets. What's happening in California isn't the same as Florida or Texas. Even within a single city, different neighborhoods can be experiencing completely different trends. To truly understand whether now is the right time for you to buy or sell, you need real-time local analysis. What's happening in your market, not just what's happening nationwide. And after considering all these factors, you may decide that now isn't the time to buy, and that's okay. For some people, continuing to rent makes the most sense. But even if you're renting, you should still be paying attention to the market because rent prices, vacancy rates, and local demand all affect your cost of living and future financial decisions. I'd love to hear your thoughts. Do you think prices will drop further? Are you planning to buy, sell, or rent this year? Drop a comment below and let's discuss. If you found this video helpful, make sure to hit that like button and subscribe for more real estate updates. Want to know more about the high mortgage rate environment we're currently in? Then I suggest you check out this video for more info on current mortgage rate trends. And make sure to make it over to my channel for all things real estate, no matter where you are currently living now. Thanks for watching.